welcome to the Business Standard Morning Show. I'm Binu Sandhu. Let's take a look at the stories for the day. Adani Group continues to bleed. On Wednesday evening, it pulled the plug on its ambitious FPO. On Thursday, its stock hit the lower circuit again. In Parliament, opposition parties are demanding a JPC or a Supreme Court-monitored probe into the Adani-Hindenburg Saga. So what's next for the Adani Group? How will it bounce back? Bhaswar Kumar reports.
Dear friends, after a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. Hence, to insulate the investors from potential losses, we have withdrawn the FPO. This decision will not have any impact on our existing operations as well as our future plans.
In a shocking about turn, Adani Enterprises withdrew its 20,000 crore rupee follow-on public offer within hours after it was fully subscribed. The group's chairman, Gautam Adani, later claimed in a video address that it was not morally correct to proceed. Adani assured that the fundamentals of the company were very strong and the balance sheet healthy. The market volatility, which forced Adani to withdraw India's largest FPO, continued on Thursday too, as the group company's stocks again hit the lower circuit. The rout in the group's shares started on January 25th, just hours after the release of a 106-page report by American short seller Hindenburg Research. The report alleged that the conglomerate had engaged in a brazen stock manipulation and accounting fraud scheme. Morning of February 2nd, the Adani Group's cumulative market capitalization losses since the short seller attack stood at over 8.2 trillion rupees. The Adani Group's response was that Hindenburg's intent behind releasing the report was to profiteer at the cost of the former's shareholders and public investors, as the latter holds short positions in various listed companies of the Adani portfolio. A day after calling off the FPO, shares of Adani Enterprises plummeted 26.5% on the bourses. Meanwhile, other group stocks sank between 5 and 10%. Gautam Adani has said that the group will review the capital raising plans of its flagship Adani Enterprises once its share price stabilizes. The group chairman also said that the focus on long-term value creation would continue, adding that growth would be managed by internal accruals. However, the group's troubles are mounting. US lender Citigroup Inc.'s wealth arm has reportedly stopped accepting securities of Adani Group firms as collateral for margin loans. The development comes amid increasing scrutiny of Adani's finances by banks. It also comes after a similar change at Credit Suisse Group AG. According to experts, the biggest risk for the group would be if more financial institutions start scrutinizing their exposure to it and access to financing becomes more challenging. These developments come at a time when Adani is pursuing a global expansion of businesses that stretch from cement and green energy to ports and mining. So, what's next for the Adani Group?
See, as a chief financial officer or a promoter of any company, if I had a fundraise plan, I would have thought of some need for the funds, and Adani's probably for the business growth and for paying off debt was what the offer document said. So from that perspective, if you see what immediate is, how do they bridge this gap? One is either they put off some plans. For example, one day before they announced a $1.2 billion Haifa port acquisition. Probably part of it was to be funded by these 20,000 crores. We don't know. But that was Adani Ports, which is a separate listed company. Adani Enterprises itself probably had other plans. One is that. Two is probably they will have to take slightly more debt from banks or whatever to to fund some of their already pre-committed, I would say, capex.
So the Adani fiasco is a very interesting one because, of course, after it was fully subscribed, the issue by having him call in favors from his friends, they would have lost about 30 to 40 or almost 50% of their investment had they taken up the offer. So he had little choice but to withdraw and say, okay, I refund everybody's money, because these are, of course, his friends. Now, the problem is that he's still stuck with the same problem, which is he doesn't have a diversified enough shareholding. And, how do you capitalize that parent entity?
And can the group bounce back? If yes, how? And what may be the challenges involved?
When you use the word bounce back, is it a stock price or a business? The Hindenburg report by itself, I don't think has impacted Adani's core business by itself. Much of the businesses of all the 7 companies are in core infrastructure where even you and I, if we are in Bombay, we switch on the light or the fan, we are actually paying revenue to the Adanis. So from that perspective, there may not be immediate impact or any impact on that core business itself. So bouncing back from a business-wise perspective, as I told as a response to the previous question, is probably the impact of the 20,000 crores which they were supposed to raise for the business purposes, and how they are going to bridge that gap of 20,000 crores, whether they are going to raise some more debt or postpone some of the plans which they had earmarked these 20,000 crores for, etc., etc.
The wonderful part of India is that we give everybody, especially well-connected promoters, second, third, fourth, fifth chances. So I'm sure he will be back. He will be back without too much problems, except for one thing. Foreign institutions, Indian mutual funds that are privately run, will shun him. On the other hand, for LIC, for State Bank of India, for many others, promoter-related companies that he has all over the world, this is not an issue, and they will continue to be having their holdings and investing even more if needed. But his immediate problem is he has to stop the shared losses that he's taking in all these companies, because when that happens, the market loses confidence and individual retail shareholders will stop holding on to Adani shares. His big problem is the issue of getting retail investors and foreign investors interested in the Adani Group companies is going to be very challenging.
The fact that union ministers have had to clarify that India's economy and green energy ambitions will be able to withstand Adani's troubles shows how closely the group's story has come to be identified with that of the country. This also means that it is all the more important for the group to settle the allegations against it at the earliest.
But this is not the first time a research firm has gone all guns blazing against a corporate house. It has happened in the past as well. Now the question is, how will this Adani-Hindenburg battle unfold? Does history give us some lessons? Let us find out in our next report by Puneet Wadhwa.
The 1,200-point intraday rally in the S&P BSE Sensex post the budget proposals on February 1st was abruptly halted. The trigger was a report that Switzerland-based Credit Suisse Group AG had stopped accepting bonds of Gautam Adani's group of companies as collateral for margin loans to its private banking clients. According to the report, Credit Suisse's private banking arm assigned a zero lending value for notes sold by Adani Ports and Special Economic Zone, Adani Green Energy, and Adani Electricity Mumbai Limited. It had previously offered a lending value of about 75% of the Adani Ports notes. On February 1st, Adani Enterprises crashed 34.3%, while Adani Ports, Ambuja Cements, and Adani Total Gas were the other prominent losers from the Adani pack. The group's stocks have been in the line of fire after a US-based short seller, Hindenburg Research, alleged that the Adani Group had engaged in a brazen stock manipulation and accounting fraud scheme. It has also accused the group of improper use of offshore tax havens and flagged concerns about the group's high debt. The Adani Group, meanwhile, has denied these allegations. Hindenburg Research in 2019 had accused Eros International of fraud and accused the promoters of irregular related party transactions. It had also questioned the role of the auditors. That said, this is not the first time that a research or brokerage house has come out with a scathing report against a corporate house. In 2012, Neeraj Monga and Nitin Mangal of Canada-based Veritas released a report on Indiabulls Group. Among their group companies, Indiabulls Real Estate, Indiabulls Power and Indiabulls Financial Services had been mentioned. Veritas had questioned the disclosure norms, and the sole purpose of IBREL is to bill institutional and retail investors for the benefit of select insiders. It had recommended a sell on all the related companies back in 2012. On its part, Indiabulls Group denied these allegations and filed criminal cases against the authors of this report. Veritas, on the other hand, filed $11 million lawsuit on Indiabulls in Canadian courts. In 2014, Veritas shut down India operations. Similarly, in 2013, Credit Suisse had come out with a report titled House of Debt. It had mentioned the high level of debt in the Adani Group, SR Group, GMR, GVK, JP, JSW, Lanco, Reliance ADAG, Vedanta, and the Videocon groups. In 2015, Credit Suisse had again warned against the debt levels and said that the financial stress in these groups had gone up despite efforts to deleverage. Panama Papers, which were 11.5 million encrypted documents, were leaked by Mossack Fonseca in 2016. Mossack Fonseca, back in the day, was the world's fourth biggest offshore law firm. It named over 214,000 tax havens where the rich and powerful rooted their fortunes. Among Indians, it mentioned Amitabh Bachchan, Aishwarya Rai Bachchan, and DLF's KP Singh. The firm shut shop in 2018, merely within 2 years of making these documents public. More recently, in August 2022, Credit Sites accused Adani Group of being deeply overleveraged but revised its stance soon after. It admitted to calculation errors in a September 2022 follow-up report. While most Adani stocks continue to bleed, Shankar Sharma of G Quant Investec believes that the group's fortunes will eventually recover with the passage of time. The company, meanwhile, he said, will find it tough to raise money from overseas markets and refinance its debt obligations.
Well, I think the larger issue here is really the international credit markets, and so far as the group is concerned, I don't think the domestic markets or domestic lending will have a problem. I don't think that is a problem area. I think the problem will be in their accessing global bond markets and being able to refinance some of their acquisitions that they have done, like Ambuja Cements. That can be a potential problem. And I'm sure, Gautam Adani is a very smart entrepreneur, one of the sharpest we have seen in India. And I'm sure he's got his eye on that particular area on the horizon. And I'm sure he'll find a way to deal with it. I mean, he's come this far not because he's a dummy. He's a very smart guy. I'm sure he will find a way. But till that thing becomes clear, the markets will remain uncertain. And we saw a huge amount of downswing today, which was really, I had not anticipated today's move because they had got the FPO done, one way or the other. But I just think today was really, like a capitulation day almost on this group stocks, which was really surprising to me. I've never believed in jumping into anything at all, whether Adani Group or any other group. We need the dust to settle down, and we should not be in any rush to make predictions or judgments. Let's see how the group deals with it. I'm sure they have the firepower to deal with it.
And it's better to buy things which are falling once they start rebounding rather than fall them on the way down. I mean, that's at least my belief.
The Adani-Hindenburg story, it seems, will have more twists and turns. Whether there is more downside to the group's stocks, only time can unfold.
It was a please-all budget which delivered what the industry and the markets wanted. And yet it has failed to lift the spirits of the indices, especially of Nifty. The rout in the Adani Group-led shares continued on Thursday, and it has impacted Nifty as well, which ended flat. Now, will the budget announcement address investors' worries anytime soon? Find out in our next report.
Equity markets have seen renewed weakness in the last week as a relentless downturn in Adani shares has clouded the market mood. Despite the budget, which has earned praise from market experts, investors have not made any decisive gains following the budget. Analysts, however, expect the street to shrug off Adani shares-led volatility in a few days on the back of strong growth enablers laid out in the union budget.
Budget has delivered, all of us know, on capex program, 30% hike. What is interesting to note is that even in FY23, they almost reached the targeted capex plan, which is very rare in this country. Normally, the budgeted differ from actual. So while everybody knows the 30% growth, it's also quite interesting to note that FY23, the actual figure was also almost in line with what they budgeted. So that gives more confidence on the capex. And second, fiscal prudence. The targeted fiscal deficit was achieved. And so therefore, that is what stock market needs. Acceleration and growth and fiscal prudence, which are top priority of the stock market. As you mentioned, unfortunately, the Adani stocks are pulling down the whole market sentiment. It may continue for a few days, but I am sure within a couple of days, market would stabilize and budget would give required support to the market to recover. So therefore, whatever negative perception and all this should get over in a few days itself, because the punishment, whatever the market wants to give, it will all be over in a couple of days. So therefore, with a good budget, I believe in 2-3 days, the market should find its bottom and start recovering.
Echoing this, Morgan Stanley said the positive budget may lead to an increase in consensus earnings estimates. It says the sharp increase in capital spending, credible fiscal consolidation, no change in the capital gains tax regime, lower than expected market borrowings, and a likely shift in the RBI stance augurs well for stocks. We remain 10% ahead of the consensus EPS on the Sensex with an overweight stance on financials, discretionary consumption, industrials, and underweight on global sectors and defensive except technology. Following Hindenburg's report alleging accounting fraud, the Adani Group has suffered a cumulative market value crash of a massive $100 billion in the past 6 days. The sentiment worsened after global lenders Credit Suisse and Citigroup assigned zero lending value to notes issued by the group firms. Back home, the group has also scrapped its fully subscribed FPO given the extended market losses, and experts remain uncertain on how long the stock market rout could continue.
Difficult to say whether overdone or no. We'll have to wait because now the perception is negative in the whole group. So one has to see how long this negative perception plays out. So maybe one has to wait for a couple of days.
That said, the street will closely watch out the third quarter earnings of SBI, ITC, Paytm, Bank of Baroda, Indigo, and Divi's Labs today, along with the January services PMI data.
Coining catchy terms and acronyms has been one of the hallmarks of the Narendra Modi-led central government. This year's budget speech too was peppered with terms which caught everyone's fancy, like Amritkal and Mishti. In our Decoded segment, we explained some of these terms for you.
The Narendra Modi government has pitched the next 25 years till 2047 when India completes 100 years of freedom as India's Amrit Kal. Derived from Vedic literature, this translates into golden period. In his 2022 speech on the occasion of India's 75th Independence Day, Prime Minister Modi said that as India turns 100, the Amrit Kal will aim towards making the lives of Indians better and bridging the urban-rural divide. Sitharaman also used the word Saptarishi, a term which refers to the famous 7 sages of ancient Vedas. For the government, it translates into 7 priorities that will guide India for the next 25 years. They include inclusive development, green growth, and the power of youth. Mishti means sweet in Bengali language. The government turned it into an acronym which stands for the Mangrove Initiative for Shoreline Habitats and Tangible Incomes. It is the new program that has been launched to facilitate mangrove plantations along India's coastline and on salt pan lands. India is rich with these forests on both its eastern and western coastline. Sundarbans in Bengal is among the biggest such forests in the world. Earlier during the COP27 summit in Egypt too, India was very vocal about promoting mangrove forests because they are excellent carbon sinks. Govardhan is a scheme launched to improve income by selling compressed biogas made up of biodegradable waste. It stands for Galvanizing Organic Bio-Agro Resources Dhan. The scheme was implemented in 2018 by the Jal Shakti Ministry. In her budget speech, Sitharaman allotted 10,000 crore rupees to set up 500 new waste-to-wealth plants. She added that separate fiscal support will be provided for the collection of biomass and distribution of biomanure under the scheme. Millets were referred to as Shri Anna in the budget by Finance Minister Sitharaman. She said that they offer a number of health benefits and have been an integral part of our diet for centuries. In order to make India a global hub for Shri Anna, Hyderabad's Indian Institute of Millet Research has been designated as a center of excellence. PM Modi has also been at the forefront of promoting millet. This year has also been declared as the International Year of Millet. The Prime Minister Programme for Restoration, Awareness, Nourishment and Amelioration of Mother Earth, or in short, PM Pranam, was launched to shift farmers away from chemical fertilizers in India. Under the scheme, the centre will incentivize states and UTs to promote alternative fertilizers. This will ultimately bring down the centre's fertilizer subsidy bill, which is estimated to reach 2.25 trillion rupees this year.
The nation's trusted bank, SBI, the banker to every Indian.
This year's budget speech was about 87 minutes long, 3 minutes less than last year's 90 minutes. That's all for today. For more news and analysis, please log into our website www.business-standard.com, and we'll see you on Monday morning. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.